I'm rejoined by Kevin Green. Let's bring in, live from Salt Lake City, Utah, Mr. George Tsilis to the show. He's going to talk about our third stock of the day with earnings coming out tomorrow morning. That's Alibaba. George, my first thought when I think of this name and I look at how far it's run, is the China freeze kind of falling out here right in front of our eyes?
In terms of the growth in China, I think this is an interesting situation from a macro standpoint. If you look at Alibaba, for instance, I mean, the stock is down about 55% or so, give or take, just roughly speaking, since about 5 years ago. But it's being picked up. If you look at it on a year-to-date basis, up around 9%. And I think this is not necessarily just because it's concentrated in e-commerce. That's about 70% of their sales. But I think the entire large cap Chinese market is picking up steam here because of the fact that we're looking at potentially now lower interest rates in the United States. China has faced some disinflationary challenges. Consumer prices have picked up in that country, and their interest rates have been lower, trying to go lower. But one of the challenges that China faces from a macro standpoint, an international standpoint, is that as they try to lower rates and the U.S. keeps them higher, it really forces a lot of capital flight out of China or potential devaluation risk. So if interest rates, start to come down in the United States, then Chinese stocks may become very compelling. And that's the macro backdrop for companies like Alibaba. But if you look at the company backdrop, for the quarter, they're actually expected to report a decline in earnings per share to $1.42 compared to last year, $1.52, but sales are expected to be slightly higher by about 3% to slightly over $30.4 billion compared to $29.59 billion for the same quarter last year. Now, the company itself, if you look at last quarter when they reported earnings back in February, they basically announced a $25 billion share buyback, which if you look at that relative to the current market capitalization around $195 billion, it's over 10%. And when I look at the balance sheet also, Alibaba, they have $85 billion in cash and equivalents. They are cash rich. But the challenge has really been their growth. And if you look at some of the growth rates on a trailing basis, sales are still positive, albeit, again, they've moderated about 7%. And that's quite in line with their 5-year average because they've been decelerating growth, especially in the last few years. Earnings are also expected to be higher. On a trailing basis are still growing about 15%, but they're expected to moderate. So the guidance for the forward basis in sales around 3.5%. That's about half of its trailing growth rates, and even its 5% earnings guidance is still quite low. And the stock is trading around half on an earnings multiple standpoint. If you look at it around 9.5 times earnings versus 22 times its 5-year average. So it's trading at a significant discount, and it's a very cash-rich company.
So, George, just real quick here, we know that this is a e-commerce focused company, obviously, but do you believe that the market may be overvaluing the e-commerce side and undervaluing the Gen AI side because they are a major player within the Chinese space when it comes to the artificial intelligence initiatives? What are your thoughts on that?
Yeah. So I think it's a good point to bring up. I think there's a lot of activity happening with the AI-centric large caps like Baidu, NetEase, Alibaba. Still, e-commerce represents, more than 2/3 of their total sales. Cloud also is about 10%. Logistics and warehousing, about 10% of their business. But if they do demonstrate some, technological advances in artificial intelligence, their intent to deploy AI in terms of enhancing operational leverage with their warehousing and logistics, that also might be a catalyst. So, look, I think, the whole backdrop for the Chinese stocks is really looking at the valuation. There's been a significant multiple compression in this entire group. Outside of a few names like PDD or Pinduoduo, that has a different story altogether on why that's higher. But I think if you consider the macro and monetary policy backdrop, cutting U.S. rates is going to be significantly supportive of emerging markets and Chinese equities. So maybe that's what the market is telling us with this pickup in the Chinese equities, especially in the last couple of months. If you look at the chart on the FXI, for instance, or even Alibaba, they're both performing quite well.
George Tsilis, great job as always covering Alibaba. We'll look forward to their earnings tomorrow morning, and we'll take a hard look. Kevin and I, thanks for coming on, George.